and good evening. I'm Melisa Idris.
And I'm Sharaad Kuttan.
You're watching Consider This, the show where we want you to consider and then reconsider what you know of the news of the day. Let's begin with news that MyEG Services Berhad has signed an agreement with a China-based pharmaceutical company to exclusively distribute its COVID-19 vaccine in Malaysia for 3 years. Now, MyEG, as many of us know, is not a pharmaceutical company, but it's an IT services provider. I mean, predominantly we know it as dealing with government services like license, vehicle registration, license renewal, and payment of summonses. So this China-based company, it's called Anhui Zifei Pharmaceuticals. It's said to be one of 5 Chinese companies conducting phase 3 clinical studies of their COVID-19 vaccines. Now, I think it's quite interesting to note this because, you know, MyEG, the health portal, has pointed out that it's unknown how Code Blue, the health portal, says it's unknown how MyEG plans to distribute any COVID-19 vaccines, as it's not a logistics company. It does not undertake product distribution in the healthcare sector. And to note that storing and distributing a vaccine is not the same when it comes to distributing consumer products.
Yeah, I think, Melissa, even if anybody's following these global conversations or reports on what the Pfizer vaccine is like and what it's demanding of, say, the British who are now rolling it out, it's an extraordinarily complex operation, right? So you have a vaccine that lasts perhaps 5 days, imported from Belgium into Britain, 2 jabs, 3 weeks apart, and
stored at the cold chain.
The cold chain, because it's crucial. That's been getting the headlines, right? But beyond that is just the speed at which you have to transport it. Already have identified populations that you want to give it to, and then make sure that those populations get that second jab, because only after the second jab, a week after that second jab, does the vaccine, as it were, take effect. So there is such a level of complexity, but we've heard from weeks now the British government, identifying the hospitals as well as creating centres for the distribution of those vaccines. The question is, are we seeing that same level of kind of process being discussed here, at least discussed in the open, right? Around identifying populations that need to have it first, so on and so forth.
But also just understanding what goes into the distribution of mass vaccination. This is something that we really need to talk about. We need to understand the processes. And MyEG shares jumped 13% to the highest level since May 2018 on the back of this news. And I think it's also quite interesting because I think Khairi Jamaluddin, the minister, had also come out to say that the 3 billion ringgit budget for COVID-19 vaccines is supposed to cover all expenses, including transportation and storage. And the thing is, we don't really know all these the details of this agreement because it's apparently under a non-disclosure agreement between Malaysia and Pfizer.
Well, yeah. So the question of price, and because I believe on Bloomberg, the head of Pfizer, at least on the CFO, had said that the price was going to be tiered. I think 1950 USD was the price for the crisis, the COVID price, as it were, and they were going to change that as the crisis wound down. But coming back to this particular MyEG case, we're looking at another vaccine. Each vaccine has its own, I think, peculiarities. The Moderna vaccine, as we know, doesn't require this kind of cold chain technology. It's stored at cold temperatures, but not, the kind of freezing temperatures that the Pfizer vaccine requires. And so what about the others? And is it a guarantee that even though a vaccine candidate goes into the phase 3 test, that it will succeed, that it will get those levels of effectivity that make it a viable proposition?
I do want to note that, even though MyEG is an IT company, it was appointed by the MOH to develop and operate the MySafe Travel digital health pass system, and that's to monitor inbound travellers, whether they've complied with the COVID testing and quarantine requirements. MyEG also operates a COVID screening portal for workers, which includes this data sharing with the Ministry of Labour. Quite important to note, but I do want to come back very quickly, Sharaad, to the conversation about revealing the costs that are involved under this non-disclosure agreement with Pfizer. I don't know much about this, but whether this is standard practice. I mean, do all pharmaceuticals companies make governments of sovereign countries sign non-disclosure agreements when you know, making an order?
Yeah, so the question would be, you know, do they not want to discuss a discount they're given the Malaysian government?
Right.
Or is it, or is the price in fact higher than what is revealed publicly already by Pfizer? So yes, like you, Melissa, much of us are mystified by the need for this opaque, you know, kind of the level of opacity in the discussion of these things, when actually what we want is more transparency.
Right.
Because there are going to be many vaccine candidates, we're going to have to make comparisons, and we want public policy decisions to be open to the public for their own assessment so that they can do the buy-in. Otherwise, you know, vaccine hesitancy and all these other issues might come to haunt us in the end.
Yes, we're going to keep a close eye on developments on that front. But in other news, former Federal Territories Minister Tengku Adnan Tengku Mansor has been given a discharge not amounting to acquittal in his 1 million ringgit corruption case. So the prosecution said it was instructed by the Attorney General's chambers to withdraw the criminal charge. And this was due, they say, to new developments in the case involving one of the witnesses, but we don't quite know the details of which has not been revealed.
Right. Okay. So again, the lack of transparency, you know, the need for the public to trust our institutions doing the right thing, and then the question of optics, Melissa. You know, we've gone through this period of political uncertainty. The question of the government's commitment to fighting corruption always will be pulled or, you know, brought into question because of the political uncertainty. The question of, and this happens in many countries where corruption charges and commitments to fighting corruption might get entangled with political calculus, and so that is the danger here, isn't it?
Well, I completely agree with you. I mean, the optics, the public confidence, whether that will be eroded, especially for such a high-profile case. I mean, you know, we've had this reported in the news, whether there could be a negative perception of the dropping of these criminal charges. Very, you know, again, vague, not quite sure why the AG's chambers has chosen to do this, and whether, you know, we'll see milestones in the future, whether we'll see further developments. I believe Tengku Adnan has another case, so a 2 million ringgit corruption case pending in front of a separate court.
Yeah, the MACC says it's going to be probing this new development in inverted commas. You know, so, but also I think we cast our mind back to, you know, the AG's decision over Musa Aman, and Musa Aman, of course, a Sabahan politician that went on to lead in a failed attempt to change the government through, you know, to votes or you know, show of hands in the assembly and so on and so forth. So again, the very problematic optics of these decisions tied up with political maneuvering. You know, it's very hard to draw, you know, and make accusations and draw conclusions, the causal relations between these events. But when they line up in the public eye, the question is, what conclusions will the public come to?
And not just the public eye, Sharaad, in the eyes of rating agencies, because we're going to take a quick break here and consider this. But after this, we will be speaking to economists to assess that Fitch Rating's downgrade of Malaysia's sovereign credit rating. That's all coming up in just a couple of minutes. Stay tuned to consider this. Hi, I'm Melisa Idris. With me is Sharaad Kuttan. Last Friday, Fitch Ratings downgraded Malaysia's long-term foreign currency issuer default rating to BBB+, this from A- with a stable outlook. Now, this is the first time that Fitch has downgraded Malaysia's sovereign credit rating since the 1997 Asian financial crisis. Joining us on the line to discuss this further, we have Shan Saeed. He's a global chief economist for JUI IQI. Shan, good evening. Now, if I may quote you, in recent reports, you've been quoted as saying that credit agencies, rating agencies come up with banal analysis which are not germane to the market. Now, this is quite an interesting comment to make, and I'm wondering whether this is a view that is widely shared by the market.
Okay, the markets are looking for macroeconomic stability. Markets are looking for balance sheet of the government. Markets are looking at aggregate demand, price inflation, trade balances, saving rate, debt to GDP ratio. What Fitch has been saying in the last, I'm living in Malaysia for the last 9 years, and I have been following these rating agencies. They have been behind the curve because, unfortunately, they don't have the human intelligence. They don't have boots on the ground information, how to gauge or how to assess the economy. That's why I said these analyses, did it make any impact to ringgit today? Did ringgit crash today? No, it did not. Did Bursa Malaysia collapse today? No, it did not. So the markets have started to realize that these reports coming from rating agencies, they have no relevance and they are quite fancy. What the market is actually looking at is reports based on critical reasoning, reports based on market-driven data, and above all, reports based on substance, because global investors, they don't have time for tabloid stories or James Bond stories. They want a hard facts that can make economic and financial sense. That's why I said these reports, I mean, they are quite banal in their analysis and they are not relevant to the market.
So, Shan, are you saying that there will be no effect, no material effect on, say, Malaysia's, the cost of Malaysia's foreign borrowings, for instance, following this downgrade?
I don't think so, because right now the market is only looking at one thing: how effective the governments are able to control this pandemic. So the market is playing is interplay between epidemiology and economics. So if governments can control this, they can, they can reduce the cost of borrowing. Look at Europe right now; they are struggling. Look at UK. Look at US. 100,000 cases per day. So when they say that cost of borrowing goes up, I mean, it has no significance to the market. Markets are already, they have counted in, priced in fact, the cost of borrowing will go up. So it has no relevance to the market. So global investors, when they are making their economic strategy or financial strategy, they look at 2 to 3 years down the lane. They are not looking at 3 months or 6 months or 1 year.
Okay, and that's quite interesting because Fitch also notably cited the ongoing political uncertainty following the change of government back in March, and that was one of the factors they cited as part of the downgrade. If investors are looking, international investors are looking at 2-3 years down the line, looking at perhaps governance and reform, is that a concern that perhaps you share with Fitch?
Look at US. After 3rd November, what we have seen, their political shenanigans. Look at Brexit. Brexit is like a serious, the whole world is laughing at Europe and the whole world is laughing at UK. Did the economies collapse? No. So political hiccups, financial fragilities, structural issues are everywhere. There are 195 countries on this earth. Every country has got problems. So the pinpoint that there are political instability, there are structural hiccups, I mean, for global investors like Juwai, IQI, it's irrelevant. We don't even look at it because for us, it's like a waste of time.
Shan, that's interesting. Yeah, no doubt there are problems around the world. But, kind of looking at the Malaysian situation, do you see any problems that include issues of maybe a slowdown on governance reforms or the serious instability that we have politically and so on and so forth? I mean, is just because other countries have problems, does it negate ours? I mean, shouldn't we not be also focused on how to address those problems?
Okay, let me take you back to 2013. In August 2013, Fitch downgraded Malaysia's rating. In November, 17 November, New York Times, page number 14, second column, Moody's upgraded Malaysia's rating. 2013 till 2015 was the worst for Malaysia in terms of, scandals. But Malaysia did survive. So I think these hiccups, they come along the way, but eventually, yes, they will be overcome and the markets will move on. So to pinpoint one particular instability, I mean, that is a non-event for us. For global investors, we look at the macro picture. We look at the strategic picture. We don't look at micro stuff in the short run.
Could I get you to expand on that? I'm very curious to know what goes into investor confidence. When they look into a market, when they look into a country, you talked about the macroeconomic stability, you talked about looking at the big picture. When you're looking at Malaysia, what is it that you see?
If you see 2 weeks back, what happened? Malaysia signed RCEP. RCEP is perhaps the biggest trade agreement that happened in the global economy. With 2.2 billion population, $27 trillion of total GDP size, the markets or the investors, they are looking at those variables. Macroeconomic stability. Is the government keen on having a policy consistency? Aggregate demand. Is the consumers buying or consuming in the economy? If you look at the GDP equation, consumption contributes 50 to 70% to the overall GDP. Malaysia's GDP is not as fast as China, but the market is coming back. So GDP will move up in a very structured manner. So when we talk about global investors, they look at macroeconomic stability. What the governments are doing, they're signing trade agreement. And if right now, if you see, Malaysia is part of Belt and Road. So if you are part of Belt and Road, you are relevant because China is investing $1.4 trillion in Belt and Road. And if you are part of that, you are relevant. If you are not, you are irrelevant. So
okay, Shan, I do want to ask you very quickly, some of the criticisms against rating agencies were shared by individuals who felt that the government was going to be too cautious in the current budget because they were going to be thinking about what the rating agencies would do. And they said they needed to be more ambitious and more imaginative. And yet we had a fairly conservative budget, according to some, and yet we also had the downgrade. So what do you see as important? Do you see this budget as sufficient in dealing with the current crisis?
Not one single budget is sufficient. In these challenging times, if we were to say that monetary policy can do the magic, no. If you were to say fiscal policy can do the magic, I would say no. I have been sharing since March that only fiscal amalgamation of fiscal and monetary policy can take Malaysia out of recession. So the government is doing it. It is a very cautious and a very conservative budget, I would say. And they will move along according to the market situation. It's not very easy to go out with a very aggressive budget at this point of time when you don't know the variables. And if you pick up the latest issue of Economist magazine, they have already shared that 2021 will be more tougher than 2020.
Right. Well, it's going to be a long recovery ahead. Shan, thank you so much for joining us on the show tonight. We really appreciate your time and your insights. Thank you. We're going to take a quick break here and consider this. Back with more, so stay tuned. Hi, thank you so much for staying with Sharaad and I on Consider This. Let's continue our conversation about the downgrade of Malaysia's sovereign credit ratings by Fitch. Now, joining us on the show now, we have Tricia Yeoh. She's the CEO at the think tank Institute for Democracy and Economic Affairs, or better known as IDEAS. Tricia, if I may begin just quoting the Fitch report, they said, to quote them, lingering political uncertainty following the change in government last March weighs on the policy outlook as well as prospects for further improvement in governance standards. Now, I'm wondering, is this too harsh a view when it comes to the downgrade? What do you think?
Hi, Melissa and Sharaad. Thanks for having me on tonight. I think that, rating agencies as these are of a certain level of importance, but not a tremendous level of importance, right? So, I think there are still several other rating agencies that have not, or rather are maintaining their position on Malaysia. So it's something that we can treat with caution, but at the same time, we do not want to dismiss comments that are coming as well. And we do admit that, yes, Fitch is one of the important ratings agencies. So that with that out of the way, and then addressing your question specifically about the political instability, yeah, I think, even though Malaysia features quite highly in many of the international indicators when it comes to doing business, For instance, the World Bank's Doing Business Index and several others as well. Comparatively and competitively, actually, Malaysia doesn't do too badly. But I think this year is quite an anomaly in terms of the political instability. And we know that ultimately the international investors do look at political stability and economic stability as well, because these are the factors that provide a level of certainty and predictability, which is what essentially investors are looking to have, right?
Okay.
Yes, you may be able to compete in terms of cost, in terms of labor, but ultimately it's the predictability of the rules-based environment, which is what international investors are looking at.
Can I ask you how governments tend to digest news of a downgrade? Does that make them more open, more willing to, governance reform?
I think it really depends. The Minister of Finance did issue a statement following the Fitch downgrade, and he expressed disappointment with the Fitch downgrade. So evidently, there is a lot of attention being paid to things like that because they influence international sentiment. There are some companies out there who are constantly on the look to invest into new markets, and they may not know the market of Malaysia specifically, but this is what will come up if they search online, right? If they want to find out about the investing environment, things like that will come out. As to whether they will respond positively or not, this really depends on the regime, and it's ultimately highly dependent on the personality of the political coalition that's currently in place. What the Minister of Finance, at least, and I welcome that statement in our own statement, he says that Malaysia remains committed to good governance, which is something encouraging. Hopefully, as he also said in his budget speech, that there's still a need to address anti-corruption issues, like following the National Anti-Corruption Plan, which is the other thing that Fitch actually spoke quite clearly about, right? So they mentioned two big factors that affected their downgrade. Number one was political instability, as you pointed out, and the other one was the importance of addressing good governance. And I would imagine that if the current political scenario is not feasible to resolve the instability, what the government can do right now, though, is to address the governance concerns.
Tricia, politicians perhaps want to make more hay than is justified with any of these headlines. But I believe the Pakatan Harapan leadership has come out with a statement quoting the Fitch downgrade and suggesting that it's time for a confidence motion to be pushed through Parliament. Now, do you think that's an overreaction? Can the Fitch downgrade justifiably be used to attack the government of the day?
I think in normal circumstances, I would not say that a downgrade is a reason or a justifiable reason to call for a vote of confidence or a vote of no confidence in this instance as well. However, if one were to look at the overall picture of where Malaysia's government is currently sitting, so the context is very important, right? And the context is that the government that rules the country today has not yet been validated with following election. It's also the context of the parliamentary majority belonging to Perikatan Nasional is very, very slim. The only opportunity that it has had to really show its confidence of the majority is when the vote to remove the then speaker took place, and that was only with a very slim, razor-thin majority of one. And since then, of course, there's been a lot of jabs taken at the current budget process, and that's taking place. So I think in the context of that, it's not unreasonable for the opposition to raise this as yet another attempt to question or to poke holes into the legitimacy of the government. But I would say that otherwise, under normal circumstances, that would not warrant a motion of such degree.
Yeah, Tricia, just to follow on with that, then, as kind of ordinary Malaysians try to digest, because there's a level of technicality involved in these rating agencies and the numbers they give, or the letters and so on and so forth. I should perhaps be issuing emojis instead. But let me put that aside. The question really for Malaysia, how do we understand where the country is, the capacity for government to actually steer a course through the crisis, which is not national, it's global, right? right? And so to end up with a kind of fair assessment of the current government and its handling of the economy and the pandemic, I mean, where would you go? What would you use in the Fitch report to extend the conversation?
So I actually looked at the Fitch report quite thoroughly, right, and in our own response as well, because there are two sections of it that we need to pay attention to. So like I said, I kind of dismissed I dismissed the political instability more because I know that different parties are actually kind of in a gridlock right now and nothing's going to be resolved until the pandemic is over, and we don't know when that is. So the first part of that is the economic response of the government, right? So the question over how much of an expansionary budget the government did and was willing to go. And I think that is the problem, as you rightly pointed out, is being faced by countries all around the world. So in that sense, I am a little bit sympathetic to the Malaysian government simply because prior to even the pandemic, we were already facing a fiscal squeeze because we have not really sorted out what our new taxation policy is, where our sources of revenue are going to be growing up in. You know, the previous PH government got rid of the GST, and that GST was actually one of the lucrative sources of income for the government. So there needs to be, some talk about returning the GST sometime in the future. I'm not saying immediately, but all that about fiscal squeeze, it comes at a time when the government was already facing fiscal squeeze even before the pandemic. So yes, now it's important to provide aid and assistance to the affected groups. But I think if you if you zoom out a little bit, there is a growing urgency as well to look past these stopgap measures and to place greater emphasis on finding new sources of growth. And that brings me to the second part of the Fitch Rating narrative, which is about governance. And I keep going back to that because there's not much that we can do now because of the economic impacts of the pandemic. But at the same time, there are things that the government can do in terms of finding new sources of growth. And this is, number one, you can address the governance issues, which the government has already actually set out in its NECP. And these are things that the international investing community in Malaysia, you're talking about the actual private sector companies, that they are very concerned about. So things that are, centered around corruption and obscure procurement processes, being able to legislate a robust government procurement act, introducing more oversight and regulation over the government-linked companies, the GLC environment, and of course legislating the Political Funding Act to regulate how political funds are raised and spent both within parties and during campaigns. Because if you think about it, I mean, that actually forms the heart of corruption in Malaysia, and no investor is seriously going to consider a relatively small market like Malaysia if it is already encumbered with all of these problems. They will be willing to go to other countries simply because the markets there are larger.
Right. Well, Tricia, thank you for your time and thank you for speaking with us tonight. That's all we have for you on this episode of Consider This. I'm Melisa Idris.
And I'm Sharaad Kuttan, signing off for the evening.
Thank you so much for watching and good night.